QuickBooks Pro Desktop 2021. Forward contract for speculation that foreign currency will strengthen maturity date transaction within QuickBooks. Let's get into it with Intuit. QuickBooks Pro Desktop 2021. Here we are in our problem 2, multiple currencies foreign contract practice problem. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. In prior presentations, we set up our forward contract, and then we made an adjustment to revalue it as of the cutoff date, our financial statement date, 12/31, December 31st. Let's take a look at the balance sheet by going to the reports dropdown, company and financial. Take a look at that balance sheet, standard balance sheet. Customizing the reports up top, changing the dates to 01/01/21 to 12/31/21, and then we'll say OK. And then up top, we have the accounts receivable. If I double click on the receivable, we put the receivable on the books with an invoice at the date of the contract, and we put it on there looking at the forward rate, projected rate, to what we believe the exchange rate will be using the market forward rate rather than the spot rate. And then we revalued it as of the end of the year so that our financials would be correct as of the cutoff date at that point. Once again, looking at the forward rate, what we think the exchange rate will be according to the market at this point in time, what they think the exchange rate will be at the end of the contract. And then I'm going to close this back out. And on the accounts payable side, we promised to pay, but that one doesn't change. But that's going to be a fixed amount. So we're looking at the variation in the accounts receivable. Let's go into Excel just to consider it in Excel. We put this on the books in Excel with the forward exchange contract, putting the receivable on the books. This is the one that's going to change when we're actually going to be receiving the foreign currency. Then we put the payable on the books that we're actually just simply going to pay in cash. We did so calculating it with the forward exchange rate that we think the exchange rate will be at the end of the time period, 120 days in this case. We revalued it with the foreign exchange rate as of the end of the year, so that it would now be valued at that point in time. Then down here, we're going to say, okay, in year 2, this is when we're going to pay it off on 3/31 X2, which is 120 days after the contract was made, which was the due date of it. So then we need to revalue. We revalued the foreign exchange receivable amount as of the current point. This time we could use the spot rate because we are at that point in time now. So we don't need the end. We don't need a forward-looking date because now we are at the point that we have been looking forward to the whole time. We then revalued it so that we can then receive the 100,000 foreign currency units and write it off with the current, basically exchange rate, current value of it. So that means that we received the units from the foreign currency and we wrote off the receivable. Then we also paid off the payable, this one simply in dollars. So that's going to leave us at this point at the end of the process. We got the cashier, foreign currency in units, and we had the loss in this period. Now, when we go into our system, what we're going to end up doing is seeing this item. We're going to reverse this adjusting entry, and we're not going to enter this entry because QuickBooks will basically do the valuation during the 2 points in time. So in other words, if I go back to QuickBooks and go to the home page for the receivable, we have the invoice and then we have the receive payment. Now, normally we wouldn't have to do anything other than that. We wouldn't have an adjusting entry in the middle here. We wouldn't have to make the adjustment as we did, for example, here in order to then receive the payment, because QuickBooks would do that for us as we do the receive payment line item. However, we may need and did need to enter an adjusting entry in the middle. So we enter that adjusting entry, and then we need to reverse that adjusting entry, and that will make it so we can just simply enter the invoice and the receive payment, and everything else should basically work itself out. So let's see how that will. So I'm actually going to do it a little bit backwards. I'm going to record the receive payment so we can see how it will be doubled up. And then we'll go back in and we'll enter the reversing entry. So to do that, I'm going to go to the lists drop down first. I want to go to the currency. So I'm going to say, go to the currency. And now we could, if it was in real time, we can actually just download the spot rates. If I hit the drop down here or the rise up, we want to download the latest exchange rates. And that would be it, because those are the current spot rates. We're using the spot rate, not a forward rate this time. Now, of course, this is a practice problem, so we're going to have to manually put that in there. So I'm going to double click on the Australian dollar. This is going to be as of, what did I say here? 3/31. So it's going to be 03/31/21. And the rate is then at the 0.602. So 0.602, 0.602. And so there we have that. So did I get that? Yeah, 0.602 looks good. Okay, so then I'm going to say okay. Actually, this should be 22. Let me do it again. This should be 03/31/22 in the next year, and that should be 0.602. All right, that makes sense. So now I'm going to say okay, and then I'm going to close this back out, go to the home page, and I'm going to go to the receive payment line item now. So within the receive payment, this is the form that will typically be decreasing the accounts receivable. The other side will typically go to undeposited funds. So I'm going to say that we're going to receive the payment from this exchange broker account that's in Australian dollars, and it's going to the correct receivable account because that should match. I'm going to check it off here, and that'll automatically populate up top. I'm going to say okay. So what we will be actually receiving is 100,000 Australian dollars that we will convert to the currency at this point in time, which I need to put 03/31/22 there. And then we've changed the date, so it's going to change the exchange. That looks so that we want that to happen. So now it's at 0.602, 0.602. So the date is correct. We'll call it an e-payment here. So that looks good. And now we have the 100,000 that we're going to be receiving in foreign currency. And we also want to put it in what's going to be going into the undeposited funds. And then we have the 60,200 that's going to be the valuation in dollars. So I'm going to say okay down here. So we'll say okay and yes. Now let's check it out on our financials, which I closed up here. So I'm going to go to the reports drop down again, company and financial, balance sheet standard. I now need it for the second year. So I'm going to say this is going to be from 01/01/22 to 12/31/22. And then I'm going to say okay. And now we have our receivable still has that 300, and that's going to be that reversing entry we'll have to take a look at. The undeposited funds, if I go into the undeposited funds, we now have that 60,200 within the undeposited funds for the payment that we had then made. Closing that then back out, the other side going to the accounts receivable. So within the accounts receivable, if I change the date range from 2021 to 2022, we have the original amount on there, and then it took out the 60,300, and then it took the difference between those two and recorded it on the income statement. So that's why we're left with this $300 here, that reversing entry. Now, once I reverse this will kind of wash out. This will make more sense when we look at the income statement. So let's go to the reports drop down, company and financial, take a look at the profit and loss or income statement, changing the dates from 01/01/2, let's say 22 to 12/31/22. And so there we have this 700 now. Now the 700 is the full difference between the two dates. In other words, if I go back to the Excel sheet, the full difference is that and that, which is the 700, because it's the difference between the start date and the end date, because QuickBooks recorded that full difference there. But the problem is that here I need it to not be 700 to properly do the cutoff. It needs to be 1,000, right? And then the item in the prior year should be $300 gain. So if I put this back to the prior year, 2021 to 2021, then we've got the 300 is correct there. But if I go to 22 and 22, it's not correct here. And that's because we basically doubled up, meaning if I go back to the balance sheet, that's because if I double click here, not there. If I double click on, the accounts receivable, and then I change the date to 2021, we've doubled up basically that 300. So we have to reverse that so that the accounts receivable will then be right, basically going back down to 0. And then we'll reverse it as of the first day of the next time period, which means we'll add another 300 here, which will bring us to that 1,000. So we'll take a look at that next time. Now, before we do that, however, I do want to go back to the balance sheet and put on the beginning balance numbers, because we started off our practice problem with $100,000 in cash and retained earnings. So I'm just going to enter a transaction that has nothing to do with the forward contract, just to have that money in there so it doesn't look funny to have a negative cash or anything later on in the problem. So I'm going to just add that now. So I'm going to go to, let's go to the lists drop down, chart of accounts, and let's add a checking account now. So we're going to need a checking account. I'm going to say new checking account, and I'm going to hit the drop down, and we want, not the drop down, just a bank account. This is just be a normal checking account. Normal checking, and this is just going to be checking US dollars. And so US dollars is going to be the type here. So I'm going to say save and close. And so we have that. And I don't want any checks or anything. Don't sell me anything, QuickBooks. And we're going to say this as of 01/01/2021. I'm just going to put on the books the deposit 100,000. The other side going to retained earnings so that we have that beginning balance number. And so we'll go ahead and record that and say yes. And it's going to retained earnings. So it's trying to warn me that that's kind of, that, you know, it's going to retained earnings. We can say that's okay. We know what we're doing, QuickBooks, but thanks for the warning. And then we're going to go back to the balance sheet. And now we've got the 100,000 there, so it won't go negative, you know, when we pay off the payable that we have. And we have it, and the other side's going into then the retained earnings. So we're also going to need a checking account that we're going to be receiving. We're going to be receiving the money in the foreign currency, undeposited funds, then going into cash. And we actually received foreign currency units. So if I go back to the home page here, we've got one item to deposit. So we could then make that deposit as well. So let's do that. I'm going to go to the chart of accounts. We're going to go to the account rise up again. And this is going to be a bank account. I'm going to say continue. And this one, I want to make in foreign currency units for the Australian dollars, AUD. So I'm going to call it checking for the AUD, Australian dollars. It's in Australian dollars. So I'm going to say save it, close it, please. And then close this back out. And then we can go ahead and make our deposit. So I will deposit it. And it's referring to the cash. And so I'm going to say that's the one we want, 100,000 Australian dollars. So I'm going to say okay. And then we want this going in as of 03/31/22. That changes the rate to 0.602, which is correct. That's the 60,200. That's what we have in our problem, right? Isn't it? You remember? I'm pretty sure. Yeah, 60,200, right. And then we're going to go that 3/31/22 Australian dollar. That looks good. So I'm going to say save it and close it. And then we'll check it out. So save and close and say yes. Checking it out on the balance sheet by going to the checking account for the Australian dollars now on the books at that 60,200. The undeposited funds has now disappeared. We can check some of those zero balances by taking a look at the trial balance if you want to drill down on it using the zoom feature by going to the reports drop down, accounting and taxes, trial balance, changing the dates from 01/01/21 to 12/31/21. And then you can kind of drill down on, well, let's make this 22 to 12/31/22, and then we can drill down on the undeposited funds if we so choose, and seeing it go in and out of the undeposited funds. So next time we'll do the reversing entry, and that should clean up this final 300 that's going to be in here and make the proper amount recorded in 2022, the second year, make that proper, make that correct.